Welcome back to Forex Advisor. Here we break down trading concepts in a simple and practical way. Today, we focus on one of the most powerful tools in technical analysis, the trend lines. Whether you are a beginner or refining your strategy, understanding how to draw and use trend lines can dramatically improve your trading decisions. Trend lines are one of the most fundamental tools in technical analysis. They are imaginary lines that connect key price points, helping traders visualize the direction of the market. There are two types of trend lines. Upward trend line, a straight line that connects the lows of rising waves, indicating a positive slope. Downward trend line, a straight line that connects the highs of falling waves, indicating a negative slope. An upward trend line acts as a strong support level. Buyers tend to place their orders around this area. Therefore, the points where price touches the trend line can often be seen as potential reversal levels. In such cases, the stop loss is typically placed just below the previous higher low. However, when the price moves to the other side of the trend line, it does not necessarily mean that the trend has broken. It could simply be a temporary deviation. Trend lines should be drawn in a way that gives the most meaningful representation of price movement. Sometimes, this means using the wicks. Other times, it's better to draw from the closing prices, or even a combination of both. What matters most is creating a trend line that clearly reflects the market structure. A downtrend line acts as a strong resistance level. Sellers tend to place their orders around this area. Therefore, the points where price touches the trend line can often be seen as potential reversal levels. In such cases, the stop loss is typically placed just above the previous lower high. However, when the price moves to the other side of the trend line, it doesn't necessarily indicate a trend breakout. It could simply be a short-term deviation before the trend continues. The reason we don't wait for the price to fully prove itself on the other side of the trend line before confirming a breakout is to avoid false breakouts. When trading with trend lines, entries can be made in the area where the price touches the trend line. In a downtrend, for example, when a sell trade is taken at the trend line touch area, the stop loss is usually placed a few pips above the previous lower high level. However, in some instances, the LHS or HLs may not always touch the trend line perfectly, and that's completely normal. What matters most is understanding the overall market structure and the relationship between price and the trend line. If you found this video helpful, make sure you like, subscribe, and hit the notification bell so you never miss an update. This is Forex Advisor, helping you trade smarter every single day. See you in the next video.